Wow, what an introduction. Good evening. Wow, it's so humbling to be here this evening. And I would like to start by congratulating Nyota and Njema because they are the reason why we are here this evening. And that includes the CEO, the family, the team, because without them, there is no company. So thank you very much, Bwana CEO Paminas, for welcoming us, because if you did not actually start, Nyota Njema will not be here this evening. And I would like to pose a question. If money was not a problem, what would you be doing? Discuss within 2 seconds in your table. Yeah, what would you be doing? If money was not an issue. And as you think of that, where will you be? And I just want one table to share. If a mic can go around, just want to hear some of the answers. What unique has come on your table? A mic? Something unique? You can pick a table randomly.
Yes. This guy looks very...
Yes, I'll be flying in the airs like birds.
Let's appreciate him. Thank you. Another table.
Let me see. You look very happy, all right? Yes.
Visibility, let's stand.
Okay. I think I'll be in my house right now because it's because of that money. That's why I'm here to empower myself.
Amazing. Let's appreciate her. For interest of time, I only allow those 2 people.
Okay. He
The
had
last
lifted
one.
his
Okay.
hand, yes.
Okay, that's fine.
My name is Joshua Maura. If money was not the problem, I would be looking for the problem using the money.
Let's appreciate him. Thank you very much. So what I'm hearing is that we are here tonight to think, how can we actually invest? And I will request the person managing the slides. You can put them on. And I want us to start in thinking, why do we invest? What are some of the reasons? And that's why I posed that question, because we are looking for money. We are looking to better our lives. We are looking for investment vehicles. And that's why Nyota Njema thought, why don't I bring land to the people so that they can invest? So the first thing to think about is protecting your purchasing power. We are hearing a lot of negative things, that the economy and all that. But the question is, that we couldn't be being fed with fear so that you don't invest. Because in a couple of days, in a couple of months, you'll find the same land that is being sold less than 300,000 appreciating beyond 1 million shillings. Then you will be saying, hey, you people, you are lucky to have bought. But you see, you thought, how do you conserve your purchasing power? The next thing to think about is growing your capital. I believe the first plots that were sold were costing much less. But over time, if those investors can sell today, they are likely to get a better return for their investment. The next thing is achieving your financial goal. What is that goal? How does it look like? Yeah? And one of them is, for example, settling your children in college. The next thing is how to diversify your income, and you'll be looking at the various investment classes that are there. Also saving on retirement. And I know Purity has mentioned that you don't make your children your retirement plan. They will be somewhere flying out of the country, interacting with other community, impacting there. But the moment as a people, we ensure we have invested, it helps taking care of our old age. The next is supporting a cause that is meaningful. I like when I hear foundations, that is impact. But can you support foundations without money? Can we? It means we have to really double our efforts, make resources so that we can pass it to the community also in terms of the impact. What are some of the questions that you need to ask ourselves before investing? Number one, is the seller licensed? Is the seller licensed? I'm so happy to see Nyota Njema. They are not only licensed, they belong to an association of real estate practitioners. That tells you, in case of a problem, you are able to appeal. If we are looking at the stock market, again, there is the licensing. If we are looking at the bonds market, again, you find a lot of licensing there. So it's key to look at an investment in terms of whether licensed or not, because if it's not licensed, the fallback position becomes a problem. The next thing is the investment registered? Like when I look at real estate, Shambani nini? Ni title. Shambani pro certificate? No. Shambani title. And that's why it's so good when you see some of these investments, somebody has a title, akona cheti. If we are looking at shares, you have a CDS account. You have your shares there. If you are looking at bonds, again, you have your bonds in your name within the CDS account. And those are just some of the investment I'm mentioning in passing. The next thing, do you understand the investment? One of the key things, and we have that as Kenyans, you find ourselves people talking about deals. Najua kuna hii deal, si ndio? Yeah? Nafikiria hii deal. And at times unakuta watu wanajificha. You hide, utaki kuambilia mtu hii deal. Lakini ukichoma, becomes a problem. You become a problem to the community. But if only you are able to speak out, you can easily be guided. If it's land, have you done a search? If it's shares, do you have a CDS account? It's not just about being given money, you giving somebody money to invest on your behalf blindly, just because we've been told about the returns. And I want just to share an example. I got a call from a former college mate of mine. And this college mate told me, you know what? I have these investors from Dubai. And all what you need to do is put in some 7.5 million shillings. Then within 2 months, I will refund you 7.5. Nikamuuliza, what kind of a return is that? Does it make sense? Of course not. Because it looked to me like a wash. Where would you put 7.5 and get 7.5 return? It's not realistic. All my world, it did not look realistic. So let's not also be very greedy and gullible to an extent of losing our investment. The next thing is, where can you find help? I feel so sad when I was looking at Mavoko and see the challenges those people were going through. The court has ruled, and they are wondering, where do we take our children? And that's why it's critical to know, as you invest, can you seek for help somewhere? The next thing, are you in control of investment? Are you able to say, hii plot yangu nitauza? My shares I can sell in Nairobi Stock Exchange. My bonds I can sell in Nairobi Stock Exchange. Then tips to investing wisely. I'll move pretty fast. Number one, know what products are available. This ranging from the stock market products, mutual funds, gold, real estate, fixed deposits, treasury bonds, and bills. Number two, know your investment, know your investor profile. There are people who will not take risks. If, for example, you get to the stock market, a share of Safaricom moved from 32 and you hear is at 19, if you cannot absorb that risk, it means that's not the right investment option for you. But have the fundamentals of the company changed? Are we not using M-Pesa? Are we not calling? Are we not using internet? Are we not renewing our licenses and passports? It's still happening. So fundamentals have not changed. So it's key to us, what is your profile like? And don't buy in the price, buy long term. Number 3, choose the right investment product. I'll move pretty fast. There are 3 things you consider. Is it liquidity you are looking for? Is it growth you are looking for? Is it peace of mind you are looking for? On liquidity, the products available in the market includes cash, call deposit, fixed deposits, treasury bills. In case you are looking at growth, we have business, and I know there are quite a number of business owners represented here. You are looking at real estate because that again can appreciate in value, quoted and unquoted shares. You are looking at money market, corporate bonds, as well as commercial paper. One unique thing with growth is that it's high risk, but chances of returns also can be very high. So in that asset class, for liquidity, you should not put more than 20% of your net revenue. In growth, it should be about 40%. The next thing is peace of mind. Why peace of mind? A 50-year-old will invest differently than a 25-year-old because of the risk profile. So peace of mind, you look at treasury bonds, they are long-term. Insurance policies to give you peace of mind in case anything happens. And those who can identify precious stones, be it gold, diamond, then that also falls in that class. Number 4, do your homework before you invest. Don't just invest blindly because you've been told, jenga haraka haraka hawatambomoa. So do your homework before you invest. Put in your money when you know all about the investment group. Number 5, build your buffer fast. Emergency funds are very, very important. And one of the things that COVID taught us is good to have a buffer of cash should an eventuality happen. Why is it key? Today you are seeing a lot of WhatsApp group. People are being added to WhatsApp group. Can we change that narrative by ensuring people set aside funds for emergency? And there are quite a number of options to do that. The next thing is focus long term. Think long term. Because short term, where you're looking at buy a plot today, unauliza Paminas, nikiuza next week itakuwa pesa ngapi? Yeah? So look at long term. Have a long term vision because that's how you are going to make high return. Number 7, monitoring and evaluation. Remember, when you come to investment, you have to set goals. Monitor your investment against the set goals and look at the returns. Are you making good returns, or do you need to change the way your investment options you've been able to invest? Number 8, be aware of scams. Be aware of scams. 1, we hear a lot of pyramid schemes. People want to put in money and they want to make money immediately. Nikiwekelea hii nitapata ngapi? Without asking, where is that person putting this money in terms of investment? So let's not be gullible. Let's avoid scams by making ourselves so enlightened. In conclusion, I know the timekeeper is pushing me. I want to say that to build sustainable wealth, it's important to have at least 4 sources of income. That is, to build sustainable wealth, it's important to have at least 4 sources of income. Be it real estate, be it fixed deposit, be it bonds, be it commercial papers, be it corporate bonds, just to name but a few. You have to have 4 sources of revenue so that you are able to have what we call sustainable passive income. I wish to end with a quote that says, you become financially free when your passive income exceeds your expenses. I'll repeat that. You become financially free when your passive income exceeds your expenses. In your investment journey, I wish you well. You are in the right place. Nyota Njema, Thank you very much for this opportunity.